All right, what's going on, guys? It's Luke here. We're going to run through a weekly outlook for the week coming up of April 27th to May 1st, 2026. I'm going to show you guys what I have marked out on my charts. Just basically some ideas I have for the week, what I'm expecting this week, and then we're going to go through the news day by day. Again, guys, Alpha Futures right now is 20% off with code LukeX till the end of April. So if you guys want any accounts for the week coming up, go check that out. And same with Top One. Best discount available, code LukeX, so go use that. And let's get right into this. So obviously, we're at all-time highs. There's really not too much analysis to go over this week. Honestly, I don't have a lot marked out on my higher time frame chart because all-time highs is just very simple. We're just looking for trend continuation. So basically, on my higher time frame, all I have marked out right now is all-time high, which is obviously this previous week's high. We have previous week's low, which is also leading into a massive weekly fair value gap right here, because as you can see on the daily, we have just been pushing and we leave behind a lot of imbalances, but that doesn't necessarily mean we need to rebalance right now. We could just keep continuing this trend higher, but it's just something to obviously keep an eye on. And then on the daily, I have marked out this daily low at 681, and then this daily low as well. And then I also have this new day opening gap low, which never got completely filled. I think this was on like Thursday. Thursday going into Thursday night Asia session, whatever. Going over to ES, I'll show you guys my ES chart, like pretty much the exact same thing though. We have all-time high, previous week's high, previous week's low, which is leading into that weekly fair value gap. And then we have these daily lows. We had this SMT, ES swept those lows, NQ never did, and then price went higher. But what do we see from this week? We see that every candle pretty much just went higher. Monday, bullish candle. Tuesday, we did get a bearish candle, but we pushed right back. We had that huge move down and then that recovery on Friday. So obviously just a bullish week. All-time highs, and when you're at all-time highs, you need to just focus on trading with the trend. Now obviously on the daily, we really don't have much to work with. We're going to be having to look at the lower time frame. So we do have this 4-hour gap right here, and this 1 hour, like these two stacked up 1 hour. So I personally want to use these 1 hour gaps right here kind of as like a condition for the start of the week. You can see that we are starting to slow down a bit here going into the close of Friday. So it should be interesting to see how we want to open up this week if we do get some news that wants to gap price up or gap price down. So that's also a factor that you have to be paying attention to the news for. But regardless of that, I'm going to be personally using this 1 hour gap right here as a condition. So how does this work? So if price comes down into this, it depends. We might get the move higher, manipulation higher first, and then we look for price in this 1 hour gap. And if price continues to respect it, what am I doing? I'm looking for longs to continue back to these highs over here. And then we're just in all-time high trading. We wait for price to put in overnight draws on liquidity. So that could be like your London high, your Asia highs, some hourly highs. We wait for it to kind of build up low resistance liquidity to the upside. We wait for some manipulation at market open, and then we look to target those overnight draws on liquidity. That's how you trade all-time highs, right? You're basically just looking at trend continuation. That's as simple as that. You wait for price to put in new highs. You wait for kind of low resistance liquidity to get built up. Maybe market opens up. We manipulate into a 15-minute gap, whatever. And then we look for longs back to target those overnight draws on liquidity, those overnight highs, London highs, Asia highs, previous day high, whatever. So you're basically just looking for trend continuations should be your main priority at all-time highs, right? You should be looking to target those overnight draws on liquidity. But again, this 1 hour gap I'm using as a condition. So what I'm going to be doing is seeing how price respects this. Again, market could open up and we could just continue up without even getting a retrace, and we could just continue to put in new highs, new lows, and that would be our format. We just look for, pullbacks, long, pullbacks, long. But if price comes into this 1 hour gap, and obviously this 4 hour gap, the small one, we really need to pay attention to how price is going to react off this imbalance, right? If price comes into this imbalance and it continues to respect it, we get a nice entry to the upside from there. We're looking for longs back to the upside to put in a new all-time high, and then from there we're looking at trend continuation, right? But if price comes into this 1 hour gap and starts to inverse it, we start breaking structure on the hourly and the 4 hour. Well, not on the 4 hour because that won't be till all the way down there, but let's say we start breaking structure on the 1 hour, we start shifting below this 1 hour gap, we inverse it. Well, from there, I'm looking at continuations potentially for price to run through all of this low resistance liquidity and then potentially down this new day opening gap low, because as we know with new day opening gaps, new week opening gaps, price loves to fully fill the gaps eventually. So this could be a main sell side target. And again, we have all of this low resistance liquidity that's kind of leading into it, right? So for main buy side draw, is obviously going to be our all-time high right here, but we're also going to be focusing on those overnight highs. But this would be our main sell side and short scenario. We really need to get below here to really see price run. And then from there, if we continue to trade down from there, that's when we look for this down here into that weekly fair value gap. I don't think we're going to get down there this week, obviously, but we could. You never know what happens with the news. We might gap down like crazy. So, yeah. So scenario number one, we continue to trade higher. We put in new highs, new lows, and we just look to target overnight draws and liquidity. And we just continue to trade with the trend. That's how simple all-time high trading can be. Just focus on longs, focus on pullbacks, and taking longs towards overnight draws and liquidity or newly formed highs. Okay. Bearish scenario. We come into our condition right here, which is this 1 hour gap for the start of the week. If price respects it, we can look for higher. But if price inverses it, we start breaking structure on the hourly. We might get continuations to run through this low resistance liquidity. And from there, I'd be looking for price to potentially run down to this new day opening gap low right around here. And from there, we can reassess. From there, we could see price, continue right back to the upside. But if we continue to displace past this new day opening gap low, then I'd be looking for shorts towards this daily low and into this weekly gap. But I don't think we're going to do that just now, right? So this is my bullish scenario and my bearish scenario. I'm going to be watching my condition, which is this 1 hour gap, seeing if we kind of respect it and want to look for continuations higher, or if we want to trade through it and look to run this low resistance liquidity towards that new day opening gap. So that's pretty much it. It's the exact same scenario with ES. On ES, we have this 1 hour gap as well, which we can use as a condition. Exact same thing. If price comes into it and respects it, we can look for higher. If we inverse it, we start trading lower, we can look to target this low resistance liquidity, you know what I mean, down to this RB, like whatever. So that's pretty much it with the analysis, guys. Very simple. All-time highs, you should be focused on taking longs and only look for shorts to flip your bias short-term bearish if we really start to break structure on the higher time frames, like the 1 hour, the 4 hour, stuff like that. And even then, if you're shorting, try to look for small in and out moves, just because you never know when something's going to come out to push price right back up. So let's look through the news day by day. Very simple analysis this week. There's really nothing crazy. Again, this is all I have marked out on my higher time frame chart. So going over here, Monday, we have no news. I will be trading on Monday, just personally de-risking, but I will be on the charts on Monday. Going over to Tuesday, we just have CB consumer confidence at 10, which is just orange folder news. It's nothing crazy. So this will be a normal trading day once again for me. Going over to Wednesday, we do have FOMC. This is the actual FOMC, not FOMC meeting minutes. We have the federal funds rate and the press conference at 2:30. So what usually happens on this day is the longer the AM session goes, the more the volume dies down, which is what I find personally. So what I like to do is try to get in and out of the market quickly. If there's a setup, obviously, and the longer the AM session goes down towards 11 a.m., I usually just tend to sit out after that. So the goal on Tuesdays or Wednesdays to try to get out of the market quicker, but I will be trading normally, normal risk. I'm usually fine on FOMC. I usually don't have a problem trading, but it always depends, right? So, but Wednesday will be a normal trading day for me. Going over to Thursday, we have 8:30 news. We have advanced GDP, employment cost index. So make sure to mark out that 8:30 candle wick if it's still there at 9:30, because this is always a strong draw on liquidity. But this is a normal trading day. These are my favorite types of days with 8:30 red folder. And then Friday, just some orange folder at 10 a.m. But this will be a normal trading day. And yeah, should be a solid week, honestly. Pretty excited for this week. It should be good. We have FOMC. We have some red folders that should bring some good volatility. And yeah, so that's it from me, guys. Again, make sure to pay attention to the news, pay attention to Twitter, see what's going on, because there's a lot more going on that sometimes that shows on Forex Factory. But that's it for me, guys. I'll talk to you guys in the next one, and I'll see you guys later. Peace.